Thanks for joining us this afternoon. I'm Tina, and it has been a big year for crypto, both in market growth and in the regulatory development, and we're here to talk a little bit about what is going to happen next. So we've seen Bitcoin hit multiple all-time highs, regulatory policy developments, and the potential to have big impact on the industry, and more institutional buy-in from major companies. And overall, general interest in crypto has skyrocketed this year. It's a hot topic not only among investors, but popular culture too. I mean, we can see Elon Musk moving the price of Dogecoin, for example. But it's still very early in this industry, which is constantly evolving. And it's difficult to predict where things are headed long term, but in the coming months, we expect to see themes from regulation to institutional adoption of crypto continue to impact the growth and trajectory of these digital assets. So I'm delighted today to be joined by this esteemed panel, and I know they will be able to shed some light on what's happening in the market today and what we might hope to expect in the coming months, and what we potentially can expect from the regulatory standpoint around some key themes. And so today we're going to focus a little bit on trading activity, DeFi, and stable coins, just to narrow that down a little bit. So to kick us off, we'll start at the end with you, Asaf, and work our way down. I'm going to ask you to introduce yourself and your company, Twitter style, 240 words or less. Go.
Okay. So I'm Asaf, the CEO of Kirobo. Kirobo basically create a safety net for all DeFi activities, so people that are using DeFi will not lose access to their money.
Haydn Jones, so I lead the blockchain crypto practice at PwC UK. Very strangely, I started my career about 100 feet in that direction. So 25 years ago, we were actually funding the trading floor at NatWest Securities. So yeah, it's a pleasure to be here and looking forward to the discussion.
And sending Swift messages in a pouch with the driver.
In a pouch,
which
yes,
I
absolutely right. That's a true story. That's a true story.
Matthias?
Cool. Good afternoon, everyone. My name is Matthias Bauer-Langgartner. I'm Managing Director for Bitpanda in the UK and Ireland. Bitpanda is a digital assets platform based in the beautiful city of Vienna and has already more than 3 million users.
My name is Rosario Ingargiola. I'm the CEO and founder of BOSONIC. We're based in San Francisco. We're basically like CLS for crypto and digital assets. We focus on real-time clearing and settlement and the elimination of counterparty credit and settlement risk.
Hello everybody, my name is Ian Taylor. I'm the Executive Director of Crypto UK. We are the UK's trade body acting for the industry. Our main objective is to advocate for fair and balanced regulation here in the UK.
Brilliant, thanks. Okay, so guys, so let's start off with a quick lightning round just to kind of set the scene. I'd like to hear from each one of you what you think the current state of digital assets is today, the one thing that you're most excited about, the biggest opportunity that you see, and the biggest concern. So let's start with you, Ian.
Oh, I'm first, okay. So adoption. Let's start with the retail space. Crypto assets have been driven by the retail sector, which is sort of the opposite way around in my experience to traditional securities, even if Bitcoin, for example, is classed as a new asset class. What we've seen is the market capitalization of all crypto assets almost touched 3 trillion this week. I think it's come back down with some price action to about 2.7 billion. In the UK, the FCA, the regulator here, has produced a number of reports, and the most recent iteration of this report stated that about 5.7% of the adult population in the UK hold crypto assets. That's 2.3 million adults. We've seen institutional adoption just recently in the last couple of weeks. The Commonwealth Bank of Australia allow their retail clients to buy crypto within their platform. We've seen PayPal release product offerings, first in the US and now in the UK. And also we've seen Visa, MasterCard provide payment settlement rails to merchants for crypto. And then opportunities, naturally, as the trade body for the UK, we focus on UK policy. However, this industry is global, so we do a lot of work with other jurisdictions. But my interesting key opportunity here in the UK is to ensure that we provide the right balance of protection against consumer harms, but also not over-regulate, to have a proportional approach to guardrails that are flexible to allow the industry to grow without stifling innovation.
What are you concerned about?
Over-regulation.
Okay.
And what we're hearing from our lawyers, and there's no lawyers on this panel today, I don't think, is that we see jurisdictional shopping happening. And I think we'll dive into some of the differences on how different jurisdictions are implementing regulation, whether on particular market actors, on the activity, on the individual tokens. So there's a heck of a lot of debate going on in governments across the piece.
Brilliant. Rosario, what's interesting today? What are you excited about? What concerns you?
Yeah, I mean, I think I agree. I think we're at a tipping point for adoption. I mean, we're seeing crypto show up in pretty much everywhere, from games to Burger King to now there is real institutional adoption. I mean, we're obviously talking to tons of very, very large firms. Biggest market maker in the world told us 2 weeks ago it's now too big to ignore. I think that the $3 trillion market cap being touched is obviously spurring that. A lot of opportunity to make money, you know, across the different types of providers, from the custodial side to the proprietary trading side, obviously the exchanges and so forth. I think I'm the most excited about DeFi, but not DeFi as it exists today, but sort of DeFi concepts, and in particular, the ability to essentially frictionlessly crowdsource almost unlimited balance sheet from very disparate people under one set of common rules without a lot of overhead and paperwork. And I think that's got huge implications for various types of financial services. Long term, has a long way to go in terms of maturing, and obviously we've all seen some of the hacks and hundreds of millions of dollars getting drained out of some of these protocols, kind of left, right, and center. But the concepts are sound, and I think it's here to stay. I think the thing I'm the most concerned about is really the build-up. We're focused on institutional trading almost exclusively, so I know a lot less about regulatory stuff than the folks on the panel. But the thing I'm most concerned about is sort of the massive buildup of credit risk that exists in all the different types of providers on the street. You have so-called prime brokers that are effectively taking client capital, putting that capital at retail exchanges without them knowing it, giving people unsecured credit, letting people settle 30 days later in a very, very volatile asset class. And so that I think there's not enough transparency, and there's a lot of confusion in the space about what is prime brokerage. And I think if you look at how all the market makers, the biggest names in the space that we're all familiar with from the FX space, they're either full bore in market making and digital assets, or they're on their way in and about to be full bore. That entire business is run exclusively on unsecured bilateral credit. So I think that's a big problem.
Matthias?
Yeah, so there's loads of things that excite me in this space, and maybe adding to what Rosario and Ian said. For me, really interesting at the moment is this move from traditional finance into the crypto world, and the crypto world literally moving towards traditional finance services and financial infrastructure. And I think BitPen is a really good example of this, because it has been established back in 2014 as a cryptocurrency exchange, crypto assets exchange, virtual currency exchange. But now it actually offers more than 100 traditional shares, ETFs, precious metals. And I can see that these types of asset classes, they are essentially coexisting next to each other, and I think this is a movement that has started, and it's just so visible that these two worlds will merge in the end. My main concern, I agree with Ian here, really the thing that keeps me awake, especially with my regulatory past, is how do we ensure that an inherently global business industry is able to overcome this national fractionalized regulatory framework that we have to deal with. And at Bitpanda, for example, we are one of Europe's fastest growing fintech at the moment, and we are trying to set ourselves up essentially in each and every jurisdiction we operate in, including the UK, which in most jurisdictions means that we have to have a VASP registration. Our MiFID II and our payment services, they can be easily passported, for example, within Europe. With crypto assets, it is actually quite a challenge to go from one regulator to another, to another, to another, and everyone will give you slightly different answers. And it's actually not that easy to scale within Europe, let alone then globally. So my biggest concern, worry, hope is that we are able to essentially come to a regulatory framework that is proportionate, appropriate, and also to some extent global.
Brilliant. Haydn?
So I would say it's the true digitization of money. So Bitcoin was, I'd almost suggest, the kind of a finished article. So we've actually gone through different iterations over the last 11 or so years or thereabouts. Obviously, the most recent is Taproot. So Bitcoin, in terms of what it achieves, so a transmissible, fully settled store of value that can be moved from address to address, that is kind of almost perfection in terms of a concept that we can apply to money. Right? Now, what we then did, we took Bitcoin apart. And what we then realized is that there were actually some really clever things in there, principally led by people like Ethereum. And we took Bitcoin apart, and then we actually discovered it could be reassembled. The ideas in there could be reassembled into things like DeFi, into NFTs, into traditional digital securities, so things like debt and equity. And where we're going, I mean, I sort of think about, can we plug in NFTs into money? Can we animate money? Can we attach brand to money so that we make money really exciting, so it's an engaging thing? And then I was sort of joking when we started, but this is true. We used to send payments from this room up to 135 Bishopsgate, and then we used to come in the next morning to make sure that the securities had settled, that we'd actually got the securities in our various Euroclear Nostro depots. And what think about the lack of simultaneousness there. You've got two very different rails that are operating, settlement for securities, payment going across SWIFT. This technology gives us the ability to remove friction, residual friction from our financial services ecosystem, okay? Which can only be good, because the value of a payment does not in of itself add value. I mean, the challenge is it's got to be regulation. We got to fast forward, up the pace, sort this all out, because there is so much opportunity here that we can tap into.
Continued theme around regulation being the challenge. Asaf, what are you excited about?
For me, the movement from CeFi to DeFi is the most exciting. So we see CeFi is Binance, Coinbase. It's basically a bank. You take your Bitcoin, your Ether, you deposit there, and they control that. And now we see the shiftment from CeFi. I think 6 months ago it was 30 billion, and now it's 200 billion into DeFi. And this is actually the vision of the decentralization. And to me, it's amazing. I think if I look back at 2017 versus today, so in 2017, the game was to buy 10 Ether and to watch them grow. Today, if you buy 10 Ether, in the end of the year, if you don't have 15 Ether, you're doing something wrong. So this is what DeFi is all about, and to me, it's very exciting. And about the concern, so basically regulation, as far as regulation, if car was invented today, we will still driving in horse and carriage. So this is my concern. I think that the regulation actually scare away the good people and bring the faceless people. And the faceless people doesn't care about regulation. And this is my major concern.
Yeah, that's a good point. Okay, so we've talked a little bit about the market growing. We've brought up DeFi, we've brought up NFTs, and it's exciting to see the volumes increase. But obviously, this comes with scrutiny from policymakers, as we're heading into trillions of dollars. So, Matthias, I'm going to start with you. You recently left the FCA to join Bitpanda, so I've just outed you here. But and expanding into a new market, essentially. So what lessons did you learn at the FCA that you believe are going to be valuable for you as you're looking to build a new market, a new platform, but amidst this regulatory scrutiny?
Yeah, Tina, you're right. I mean, I spent more than a decade at 3 different European regulators before joining Bitpanda. And it was a really exciting time for me at the FCA because I think the FCA did a lot of things right. They did invent, set up, establish FCA Innovate. They were the first ones to really interact with crypto asset businesses, try to understand how they work, what sort of risks there are, how these types of businesses interact with the regulatory framework, try to understand whether or not the regulatory framework is fit for purpose or where something needs to be tweaked. And I think the FCA was really leading the pack and in terms of understanding crypto assets taxonomy and thinking about whether or not a regulatory framework is necessary. So I've seen firsthand that at the FCA there is loads of people who care about crypto assets. There is people who understand crypto assets, and honestly, they also want the UK to thrive when it comes to crypto assets. But as you say, it's a completely new market. It's a completely new asset class. It's completely new market players. So they are extremely risk averse, I think, and really scrutinize these types of businesses extremely heavily. And to be fair, I think it's honestly it's something like a learning curve for both sides. Firms who will get in contact with the FCA, like Bitpanda does, most likely will do so as part of the crypto assets registration application, which, to be fair, is well, the FCA has got a really holistic approach when it comes to scrutiny. As I said before, they're really risk averse, trying to understand the risks as good as possible, and specific risk mitigations the FCA has contemplated with. It's probably fair to say that the FCA has got a really, really high bar. I would probably even argue that it's the highest bar in Europe for these types of firms. I don't think that setting a high bar for crypto asset businesses is a bad thing. I actually think it's a pretty good thing. It will help us to raise the standards within the industry, and will also give firms like Bitpanda the opportunity to show how professional these companies work. I mean, Asaf, you just said Coinbase is basically a bank. I think you need to act and set yourself up as if you were a bank, an e-money institution, a financial services institution. So what I've learned at the FCA is they really take it seriously, but you have to think like a financial institution if you want to be registered as a crypto assets business. My lessons learned really is expect the unexpected. It's going to be a pretty intense, holistic scrutiny, but I think it's good because both sides will learn, and I hope with time, to be honest, that the FCA's expectation in terms of crypto assets firms is a bit clearer, because at the moment I don't think that the crypto assets registration process is actually really smooth. I've even seen articles stating that UK lawyers are advising firms not to set up in the UK, which is definitely a situation that no one can be happy with. So yeah, I think expect the unexpected, be well prepared for an encounter with, encounter sounds so adversarial. Just be well prepared and think like a financial institution, because essentially, at the end of the day, this is what we are.
Well, and going back to the convergence of CFI, DeFi, TradFi, and that those bridges forming, I think it's for some companies who are digitally native in their inception, they don't come from a regulated background, right? So there is that kind of knowledge hurdle in the beginning, and some of these platforms weren't built to be regulatory compliant from inception. Rosario, just looking at this view from an institutional client perspective, we've heard a lot about the institutions are here. You just said it. But are they impacted at all by this continued scrutiny by the regulatory community? Does that give them pause?
Yeah, I mean, well, they're definitely here. I would say that I think up until very, very recently, what people are calling institutional is, basically anything that's not an individual. So family offices, proprietary trading firms, people that basically are not fiduciaries, they're not regulated entities, and they can effectively do whatever they like with their capital. And so those folks obviously don't have to be held to the same high bar. I think, clearly, if you look at just even what's happening in custody with all the tier one banks effectively on the cusp of launching some sort of a crypto custody offering. Just, you know, they're definitely moving into the space in force. I think a lot of the really regulated entities and the people that are fiduciaries, they have certain standards that just have to be met. They can't just dive in and start funding accounts at retail exchanges and setting up unsecured credit lines with market makers, and trying to figure out how to, you know, do that at scale is quite daunting. So I think the regulatory landscape does represent a bit of it's giving a lot of people pause. I mean, we know, for example, bank holding companies are waiting for clarity whether or not they can actually even custody digital assets directly, so they're not doing anything with physical. They're only doing things with derivatives. You know, but I think by and large regulation is good, as long as we get it right and we don't sort of regulate it out of existence or out of various jurisdictions.
Yeah, indeed. So, Ian, you work a lot with regulators and policymakers every day. Looking at you know, the retail market growth, the institutions are coming in with some hesitation. Let's talk a little bit about these decentralized players that we're hearing so much about. So, how should regulators engage with DeFi? You know, Matthias just mentioned the article that we saw this week about companies being advised to set up outside of the UK and sell into the UK. What potential benefits and risks do you see for the market participants in the DeFi space from a regulatory perspective?
Yeah, there's a lot of headwinds and there's a lot of super interesting development and innovation going on. And just to quickly pick up on Matthias's point, the new regulatory regimes we're seeing, for example, you mentioned the money laundering regime, and this is a transposition of EU AML DeFi. So all European countries are having to do this. And we at Crypto UK, all of our members are in this application. And there's a lot of friction because quite a lot of the applicants haven't been regulated before, because this is a brand new technology with brand new market players. And so there's always going to be friction with a new regime. But we agree that money laundering, terrorism, and finance naturally is bad for society. So that's in play. That will get sorted out as we learn, both the community and the policymakers. But DeFi, DeFi is a hot topic. I've been active in DeFi myself. I've been playing around on protocols, lending protocols, decentralized exchanges, earn products, stable coins for a while. And having a finance background, I find it fascinating. Fascinating new models that are trustless, where you do not have any frictions to onboarding. Everything is peer-to-peer. You set up a wallet and you start playing around. And what we're seeing is there's benefits to this. I won't focus on the risk, and this is what we talk to the government about, but what we're seeing is financial literacy, access to finance, access to wealth generation happening across the globe, and that's really exciting. And we work closely with the UK government. We're launching an all-party parliamentary group for crypto assets and digital assets to really help educate, because right now there's a lack of knowledge around what's going on. And you know, DeFi is one use case of blockchains. Layer 1 protocols such as Ethereum, Solana, Cardano, there's a whole suite of these that are really getting traction and users behind her, bootstrapping the network, getting people building dApps. There's many use cases, not just financial products, but that's just the first thing that's happening. But what I see where DeFi is in terms of regulation is it's too new. 3 years ago, we were having this discussion around centralized exchanges, and we still haven't solved that problem. We've got existential threats in the industry coming out of jurisdictions such as the US, perhaps putting stablecoins in banking regulation in Europe. We're putting stablecoins into payments regulations. I think that's a better fit because the bar is so much higher to be a bank, right, in terms of regulatory uplift and resource requirement. And so other intergovernmental agents, such as Financial Action Task Force, have potentially shoehorned in software and DeFi protocols that are self-governed, decentralized, autonomous organizations. That's a whole other debate. New governance models around how corporations run, what is decentralized, how decentral, and we've seen many speakers out of the US and the UK talk about this. But for me, we need to, one, start with education, really work as a community to help folks understand both the institutional space, the retail space, about what's going on and what the right policies are. Because for me, public blockchains are the best case use scenario for understanding transactions, understanding who's doing what. And we can trial this data and we can even block transactions really easily. And I'm not even going to get into the technicals around zero knowledge proofs, baking in identity into tokens, new types of cryptography that are happening. Academics are piling into the industry. New codes are being developed that are going to be better better security, faster, removing frictions that we have in financial market infrastructure now. We can do away with settlement. Settlement finality can happen like that instantly. So there's collateral can be done away with. These are just new aspects that are happening that we really need to be mindful of before we go out there and say, oh, a broker includes a miner, which is what we're seeing in the US.
Thanks. So Asaf, looking at the DeFi space, you have a number of services, most famously the undo button for DeFi users. There's a lot of opportunity. Ian has very passionately just explained some of those opportunities, but we're still seeing regular kind of breaches on protocols, rug pulls. It's a very, very nascent part of the crypto ecosystem. How do you at Kyriba approach that, and what are you guys trying to solve for to make some of this counterparty risk less risky?
As I said, we see the shiftment from CeFi to DeFi. That means that the user himself holds the entire amount in his hands. It's very good. He has full control, but he has full control. Basically, if he made a mistake, that's it. So we identified the three major key points that needs to be solved. The first one is the ability to send money by mistake. So we solved that by the undo button. So if you made a mistake, you can retrieve the money back. The system handled $1.7 billion so far, so it's going well. The second aspect is the backup, meaning that user can lose access to his wallet. So we create a decentralized solution for backup, meaning that if the user lost the wallet, he will not lose access to his assets. And the third one, and I think that in 10 years we will see the impact of that, is the inheritance. So today, if people died, the money is lost forever. And with our solution, the family is going to cry only on him and not on the money also.
Right. Okay, so Haydn, I want you to kind of wrap up the DeFi topic for us now. In an advisory,
Really?
Yeah.
Good luck.
So from an advisory perspective,
I'm going.
We've got the regulatory view, we've got an institutional view, we've got a retail view, we've got a purely kind of DeFi native view. What are your clients asking questions about? Where do they see the risks and opportunities from a DeFi perspective?
So one of the big things we do is we work with firms that want to be authorized in a general sense from a crypto perspective, and or are authorized but have got themselves into trouble with the regulator, okay? One of the really interesting things we're just in the process of completing now is a legal opinion on a DeFi protocol to understand what it was, right? And stepping through that was interesting in terms of the specific jurisdictional regulatory requirements that have been laid down. The challenge was the absence of case law, okay? Because there's very little case law on this, because ultimately that's where it gets tested. So actually, it's quite possible if you're clever and you've got some pretty sharp coders to write a protocol that weaves a very fine line through all of this stuff, all of these paragraphs, that gets you to a place that it's perfectly unregulated. We then extend that to the point where we get to it can be fully. It's impossible to regulate it, and I think my big conclusion is that I think it will bifurcate. I think the issue is that it will be, forgive me, I mean, I think there is an institutional way through this, okay? But I think the result of regulation will be unintended, and it will drive some of this underground, which I don't think will be good for the industry, because, I mean, this is why we've got things like the travel rule. I think regulated institutional DeFi will be a wholly positive thing. We've got Canary Wharf down there that's full of big data centers, and they do all wonderful things and provide wonderful services to society. But we come back to the frictional cost. The cost of a payment in an economy does not, in of itself, add value. DeFi offers a way through that. So, again, we come back to it's the pace at which the regulators are working. They're highly skilled people, but this is a very fast-moving space. So I think we've got to remain open-minded and keep challenging each other, actually challenging the regulators, challenging ourselves to do bigger and better things.
So I'm going to stay with you for a second, because I want to kind of shift focus a little bit to one of the enablers of this DeFi ecosystem, and that's stablecoins. So governments across the world have been focusing heavily on stablecoins. I think post Facebook and Libra, aka DM, the whole idea of a currency that could be controlled outside of central banks and be global in its nature really put a lot of regulators at unease. The U.S., the President's Working Group last week published a report on stablecoin regulation, and they're basically saying that stablecoins should be regulated by banks, essentially. So Chair Gensler of the SEC also indicated that he thinks stablecoins are securities, which would absolutely wipe out this DeFi market. So my question to you is, how important are stablecoins for this emerging ecosystem to grow and thrive? And how beholden is the rest of the world to policy coming out of the US?
So the comments made by Gensler are, I would say, useful in that we have to have some kind of emanation of the state, some kind of framework that's derived from the state that we put around this technology so we can actually achieve its full utility. I mean, unfortunately, the reality is that people do bad things, okay? I like to sort of pose the question, so we're all sat here, we're using electricity, right? Electricity is actually really quite good, but it's actually quite dangerous. People realize that we can do some very clever things with electricity, and they impose regulations and standards, okay? Well, you can do exactly the same thing with money. You can do some really great things, but you can also do some really bad things. So I think putting frameworks, government-derived frameworks around technology and things like electricity is very important. Classifying stablecoins as securities, I think it is a little bit over the top. Forgive me, but because we bring with it all of this paraphernalia that's associated with treating it as a security. Treating it simplistically as, collateralized, transmissible digital value that's sat in a regulated deposit taker is actually quite good because it allows us to do some of the things I talked about earlier. We can program money, we can animate money. So I think we need to be realistic in terms of what we can do. I think we need state frameworks, state-backed frameworks to allow, to leverage the full utility of what we've got there. Does that sound sensible in terms?
No, I think it sounds very sensible, and I think that stablecoins being classified as securities is completely crackers. So I agree with you, Ian. It's a very different situation in the UK and Europe more broadly with the proposed MiCA regulation. Let's say the US policy decisions go through as they have suggested. What impact does that have on the UK and Europe?
That's a good question. I really couldn't foresee the impact. Stablecoins are not government money. The US has the reserve currency and naturally can enforce its will on all jurisdictions and has done in many examples, whether you agree with that or not. It just is the way of the world right now. But what I see is Europe sees stablecoins differently to the US. It doesn't see it as a threat, in my experience, and HMT, Her Majesty's Treasury, just closed a consultation earlier this year on stablecoins. That will come into regulation. A statutory instrument will be issued next year. We talked to Treasury around this quite a lot with our members to try and decide the right balance of protection against people that hold stablecoins. And Europe is largely similar. You mentioned MiCA in terms of the way they're approaching the regulatory clarity. There is some slight differences because not all stablecoins are equal, right? You can have reserve-type stablecoins that use fiat, US-backed, or any other currency. You can also have algorithmic stablecoins. MakerDAO is the best example. And these are differently being approached by Europe and the UK. So there's some nuances there. Ultimately, I would hope the US policy, if it goes through, regulating stablecoin issuers as banks, I believe that's an overreach. And I don't see it having any impact on stablecoin issuers that want to set up in Europe and the UK.
Interesting. So, Matthias, how important our stablecoins to a centralized exchange, how are people actually using them? I think that's one of the questions that we get the most from regulators. There's a question around the commercial paper that sits underneath, or the cash or cash-like instruments that underpin them. But what are people actually using them for? What are they doing with them? And I'll ask you, Rosario, from an institutional perspective as well.
Yeah, so from my perspective, I think stablecoins are really important to grow the ecosystem and actually also shape the ecosystem. We need cash on distributed ledgers when you think about interoperability of different systems, IoT, and so on. So I think they're really, really important. With your specific, thinking about specifically what they mean for centralized exchanges like Bitpanda, actually I think they are not that important if you think about trading activities. A centralized exchange like Bitpanda has got really good off and on ramps to fiat. So for the user, it doesn't really make any difference whether or not they're buying or selling crypto with Tether or USDC, or they use their fiat funds. So from a trading perspective, there is not such a big difference. But I see the role of centralized exchanges as the point of sale for these types of tokens. So at Bitpanda, for example, and most other exchanges sell the same crypto assets. We have USDC, we have Tether, and they're really popular on our platform. I think people will come to centralized exchanges because of the user interface, because of the customer service, because of the fiat on and off ramps, and they will then use those stablecoins to interact with DeFi protocols to do payments globally, instantly, maybe even use traditional financial services that are at some point in time DeFi protocols like parametric insurance, flight insurance, and so on. So essentially, I think they are really important for the ecosystem. Centralized cryptocurrency exchanges will act as a point of sale to allow people to interact.
Rosario, how are institutions using stablecoins today?
Yeah, it's a really big topic. I think there's a lot of interest in staking certain types of stablecoins to get yield. Right, that's something that I think is in high demand right now. I think the biggest, they definitely need to be regulated and have some kind of a framework around them. And there's $200 billion of these things outstanding, and they're wildly different, right? So if you look at DAI, it's an algorithmically created stablecoin. 30% of the underlying value or collateral, if you will, for the redemption value is essentially Ethereum, which is a highly volatile asset. Not everything is backed by actual fiat, and some of them are actually indeed securities. If you look at what Arca is doing with Arcoin, it's a treasury-backed stablecoin, and there are very limited. We explored using it as a settlement vehicle, because one of the most interesting things from an institutional perspective is being able to automate sort of movement of fiat assets between custodians and things like that, which is to me one of the great use cases from an institutional perspective. And we couldn't use our coin in our use case because it was a security. So
I made an assumption at the beginning of this section that over onerous regulation would harm DeFi. Do you agree with that? Will overbearing regulation on stablecoins inhibit DeFi? I made an assumption. What do you think?
I think that you're right. I disagree with Matthias, by the way. I think that stablecoin is the assets of everything that we are doing. For example, if I trade, when I go into position and out from position, it's to stablecoin. So this is one. Second, it allows me to do direct payment instantly without go to the bank system. So obviously stablecoin is a huge, huge part of that. If regulation will try to harm that, it will, in the short term, it will crash the market, but in the long term, it will not affect, because unregulated, faceless stablecoin will emerge, and people basically will shift to that. By the way, I think that the regulation should go to the different path. They can shift their own coin to a stable coin. They're afraid that the bank will crash because of that, but I don't think so. For example, if I have $1 million today, where can I park this $1 million if I'm not invest? In the bank, right? And what the bank will give me? Nothing. Now,
They'll charge you.
Exactly. Now, if the bank know that I can park my USD in my wallet, they will actually try to make a revenue share and say, hey, park this coin in my bank, and then they learn that they have a place. They can, people still need credit, people still need loans, so they learn that, but less aggressive as they do before, and with revenue share to the actually owner of this coin. So, but this is my perspective.
Brilliant. Thank you. Well, we have about 5 minutes left. I can ask you guys a very boring question about what's next in the regulatory landscape, or we can ask the audience if they have any questions. Should we do that? Does anybody out there have a question? No questions? One question. 1 second.
So, the proliferation of meme tokens, does that validate or damage what we're trying to build here?
Does the creation of meme tokens,
Or the hype cycle around these meme
the
tokens?
hype cycle around meme tokens, does this help or hinder? Is that your
Yes.
question?
Correct.
Who wants to field that? What do we think about meme tokens? Does it make the market more buoyant or less?
I'm happy to take a first stab. It does our industry no favours. And you would have seen recently there was some advertisement on the Transport for London for a meme token. I can't remember. A reporter reached out to me to try and understand what this was. I did a bit of digging on Etherscan, and you can quite easily see, if you have some knowledge, that this is just a pump and dump scam coin, this particular one. And yeah, the whole Dogecoin, the whole Elon Musk story doesn't do crypto any favors, because what that does is it tarnishes the whole industry, which 99.9% of the people working in this space are doing good work, brilliant stuff, want to work within the boundaries of regulation, whether retail or institutions. And these are a small cohort of people. And you see this with any innovation, people trying to get rich quick.
Does everybody agree with that? I disagree.
Oh no, you're not long these times.
No, so I agree that there is a potential to incentivize pump and dump schemes, but as an example, I have a brother who got into crypto because it was a bit of a joke. It was entertainment, and it got him in at very small amounts again. So I think there's some risk balance, right? And he's relatively financially literate anyway. So it opened a door for him. And I think maybe that's also kind of what NFTs are doing. People that wouldn't otherwise be interested have come into the space and then learned. And then obviously, once you kind of understand that there's no intrinsic value in a meme token, chances are you probably trade out of that into something more valuable. But so I don't know if I completely agree with that.
Well, I think NFTs are fundamentally different. There's
True.
a whole, yeah.
Any other questions? No? Okay. Well, then I will ask you then for your what's going to happen if there's going to be a policy movement in the next 12 months, given that you've all identified that as the biggest risk, starting with you, Asaf, what do you think it will be?
I didn't hear the last sentence. What is?
So if regulatory action is taken, what do you think we can expect in the next 12 months if there's some big regulatory move?
To be honest, regulation is only for the honest guys. Like all who is running PancakeCoin? Who? This is like the second biggest decentralized exchange. No one cares. They actually copy Uniswap and that's it. So regulation is, sorry about that, yada, 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 but basically the good, it's only affect the good person, the face, the people like me that come with a face and try to build something out of this ecosystem. But the faceless guys doesn't care. They have this Discord account, they have the Telegram, Twitter, nobody know who they are, and they pump and dump, and they do that. And by the way, about the meme token and the pump and dump, to me it's emphasized that technology is very important, but not as the marketing. So the marketing is the huge part of any startup company, and basically it's a mini startup. And people are sometimes stupid, sorry about that. So if you diversify and basically invest only 3 or 5% of your asset, so it's fun to do in derivatives and other tools in the regular market. There is stupid thing like that as well. So sorry about that.
Haydn, do you think that there'll be a big regulatory move
Yeah,
this year?
so I think it will be longer than 12 months. I think it's probably going to be 18 months to 2 years. But I think there's 3 things in the pipeline. We will see a framework for stablecoins that will come out of the United Kingdom that will be laid before Parliament. That's the first thing. Second thing is we'll see some form of consumer protection framework that will come out. I think that's absolutely essential. And the third, most terrifying, is we will see some guidance requirement for prudential regulatory capital.
100%.
If you have this stuff on your balance sheet, you've got to have capital to back it.
Matthias?
Yeah, I agree with Haydn. I don't think that there's going to be massive changes in policy in the next 12 months. But people are working on the stablecoin regime most likely, and I just don't see any critical changes. I just hope that the ecosystem is going to engage much more again. Industry, regulators, and we're doing our best to enable that.
Yeah, I don't think anything's going to change materially either. I think what we'll see is more actual digging in and attempting to sort of solve some of these issues, bigger debate that's taken more seriously maybe than it was in the past. The one thing I can hope for, though, is that at least in the United States, if we could figure out how to define what is which of these assets are securities and which are not, that'd be really nice. Or maybe which agency is
not going to happen in 12
regulating
months.
them. That would be nice too.
Well, the new bill was being recirculated yesterday, giving the CFTC all of the purview that the SEC wants. So I think a cat fight is going to happen. Ian, what do you think?
Yeah, there's a lot of difference in different jurisdictions, and we touched on the jurisdictional shopping, and we hear that a lot from our legal friends, and so it's all up for grabs. So governments are trying to ensure that they get this right with the help of the community. Enforcement action is happening. That will drive policy, test cases in court. One could imagine that a smart contract blows up and hundreds of billions are lost, then somebody will take that to court, and so we'll get some clarity there in the decentralized space. But right now in the UK, we have clarity, money laundering, financial promotions, advertising, crypto assets, stablecoins. That's the UK. I can't speak for every jurisdiction, I don't have the time, but yeah, it's clear.
Brilliant. Well, thank you guys so much. We ran out of time, and they don't have any more questions, so I guess we've solved it. Everybody's walking out of here and know exactly what they need to know. Thank you very much.